All right.
Welcome to CEO Money. I'm Michael Yorba. Thanks for joining with us. I've got Keith Schneider of Marketgauge on the show with me today. Keith, welcome to the show.
Hello. Good to be here.
All right, Keith. We've got some charts up with our pictures talking to each other. Tell the audience what the chart on the left is and what the chart on the right is, and what it tells you going forward for the gold market.
Okay. The chart on the left is a intraday chart, and it's in 5-minute candle charts. So they're 5-minute bars with candles. And the other thing that we've put in here is that dotted green line and the dotted red line is the demarcation of the 30-minute opening range, which is a technique that I use very successfully on the floor, specifically trading gold through its most volatile periods in the late 70s and early 80s.
Okay. And the chart on the right?
The chart on the right is a daily chart. The green line here that's trending down is the 200-day moving average. The blue line here is the 50-day moving average. And the interesting chart feature is the horizontal green line is the 6-month calendar range high, which comes in just around 119.70 or figure around 120, and the 6-month calendar range low, which, as you can see, is attempting a breakout today.
Now, give us the significance of that going forward for the gold market.
Well, first of all, the 6-month calendar range is a trading indicator not commonly used, but highly effective. And basically, on a 6-month calendar range basis, it gives you the 2-week high and low. So that would be starting in the end of June to mid-July. And once you trade above the 6-month calendar range high, you're basically in a bull mode. Now, what's interesting with gold in particular in the markets is the seasonals around July and January are important. So you're definitely in a seasonal trend at the moment, which is generally positive for gold. So with this action over the last couple of days here, trading above that 6-month calendar range low, you can sort of see the fact that we haven't really been above the 6-month calendar range low since mid-May. So this is an important and significant event, and that's sort of in alignment with serious concerns about the market, right? Gold is certainly a good anxiety index. So in essence, putting these two things together, the short-term chart and the daily chart, what I'd really like to see is a breakout and an intraday confirmation on the opening range, telling you that there's some real serious buying coming in other than overnight action.
Would that
would confirm it.
Would that give us a target of somewhere around 119, the lower target?
Yeah, at a minimum, it would probably give us a target right around the 120 level. So, it's about a $20 move or so in gold bullion. But really, if you take a look at it, obviously, let's say we go to a weekly chart here, just moving out to a weekly, you can see we've been basing out. Now, the other thing to note is on a weekly basis, this particular moving average here is the 200-week moving average. If we cross that, that's a significant point as well. So what's interesting, the daily charts, the weekly charts are aligning within a very tight trading range between this 117.80 level and the 118 level. They're all coinciding. So that's a powerful catalyst if we can actually close above here and remain strong today.
Well, let's see how we go moving forward. Thanks for this brief update, Keith. I appreciate that. I know you're going to come back and follow through on this to see how the market is moving forward. I agree with your analysis. Not that you need that, but I'm just saying I do. And I want to thank you for taking the time to come onto the show and help the viewers of our show stay on the right side of the market.
Thanks. I enjoyed being here. Look forward to next week.
Keith Schneider, Marketgauge, marketgauge.com. I suggest you follow up with him. Check out what he's doing. He has a lot of videos on his website that are instructional, and I know I learn something every time I talk to this guy. Thanks for watching CEO Money. You've been talking to Michael Yorba. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.